all of the elites, billionaires, they all have this specific type of entity. You can go on the IRS website, type in, and you can see what it is. And it's tax exempt.
Basically, you set up a structure. Very few people know about it, and it literally reduces your tax liability to what?
You can get down to single-digit tax rates.
How do we do this? Dude, you help people basically eliminate or drastically reduce their taxes.
That's right. Yeah, absolutely.
High net worth individuals usually.
Yeah, exclusively.
You need to like make some before you worry about saving it, right?
That's exactly right.
So if I have a lot of high net worth individuals listening to the show, which I do, you better pay attention because it's the second visit. First visit, we talked a little bit about it, and now you got some AI software.
Yeah, that's a separate thing altogether.
Oh,
but yeah,
that's something else.
We released that, yeah.
All right, so Together CFO, folks, is Casey's company, and basically you set up a structure in some way that, is completely legal.
Yeah.
Very few people know about it, usually the ultra wealthy, and it literally reduces your tax liability to what? Nothing or very little?
There's always going to be a little bit, but you can get down to single-digit tax rates.
And that's what the rich are doing.
Yes, all of the elites, family offices, billionaires, they all have this specific type of entity within their structure base.
And it's always hard to believe only because the IRS does a great job scaring people. Very
good. You're a prime example of that, right?
I'm a prime example.
Yeah.
Yeah, otherwise I already would have been and I'd be like, yeah, he does it for me. But I'm always worried. Because, dude, it just can't be. The IRS just freaking instills that fear in you.
And they do a great job of doing that.
Yeah, well, the CPA that was here earlier, he said, he was scared of the IRS for a long time until he realized, they can't really do much.
No.
It's not the IRS that does the prisoning. It's something else. You broke a federal law or something.
A lot of things are changing as well with this new administration.
What do you think about it, the new administration?
Fantastic. All for it. I think for business owners like us, it'll definitely help us grow. There's going to be a little bit of pain before the good times start rolling again, but I think it's much better than all this lefty woke BS that we've been dealing with for a long time.
Okay, so let's review for some people that may not have heard you last time. How do we do this?
So firstly, let's start with what it is. So it's a non-profit, it's a private foundation, and that splits into two sections. Most people have heard of a non-profit or a 501c3, but they don't know the next level of detail. It splits into two sides. You've got an operating non-profit, and then you also have a non-operating non-profit, right? So we're exclusively talking about the non-operating side, because the operating side is what everyone already has, like whether it's the Boy Scouts or whether it's Rolex or the NFL, all these companies, they all have non-profits.
Or the Lee Foundation if I set one up.
No, we'd set you up as a non-operating one, not as an operating one. And I'll tell you the difference. The difference is operating foundations are soliciting donations from anyone to open, knocking at your door, will you give us some money? Whereas a non-operating foundation is not doing that. It's usually an individual or a family that are donating into this foundation exclusively. So it's not going around knocking. It's for the elites to donate to themselves, where they take the money from the left hand and they're putting it into the right hand. And the change is that you lose ownership, but you keep control. And that's the difference, because taxation follows ownership. That makes sense?
Makes sense to me.
All right, there we go.
See, just like last time, you're going to make me want to do it again. And then as soon as you leave, someone will tell me, oh, dude, and I'll get scared again. So I want to make sure that the bomb squad doesn't get scared. So I'm trying to be thorough.
Yeah, and rightly so, because like you said, there's so much literature out there, and certain agencies like scaring people, but it's easy done. You can go on the IRS website, type in private foundation, and you can see in clear bullet points, non-operating foundation, what it is. And it's tax exempt. You get a letter directly from the IRS saying that this entity, the Bradley Foundation, let's call it, is tax exempt. So you don't have to pay tax. You do have to pay Other things, so there's a net investment income that you do have to pay, which is at 1.39%.
So if I put $1 million in it, I would owe $13,900.
No, you wouldn't. You would, if that million was put into the market and earned dividends, whatever those dividends you received, you'd pay 1.39% on that number.
Wow. So what if you put the money in that account and you just leave it there? It doesn't do anything.
You could do that. You get a big tax write-off though. So,
but what about all the ways I make money?
But that's wealth creation, right? So we're talking about two different things. Putting money into the foundation, you're going to get a tax deduction of up to 30% of your AGI. And then the money goes into the foundation. You can reinvest it. You can buy stocks, real estate, crypto, whatever you want to do with it. But it's not in your name anymore. It's in the name of the foundation. Does that make sense?
Yeah. Can people come up with any name they want?
Yes.
So you can make a cool name?
Yeah. You could have the Dropping Bombs Foundation.
Does it have to be called a foundation?
It is a foundation, yeah. So you wouldn't have to list it if you were publicizing something about it as a foundation, but the backup paperwork would all be a foundation.
So like if I wanted to just call it like Four Angels.
Yeah.
It's a good name, I think. So I just set up Four Angels.
Okay.
And then I put $1 million in there.
Yes.
And then that $1 million could go buy a piece of land.
Absolutely.
And then I sell the land and let's say I make $2 million.
Yep.
Four Angels owns that land.
Yes, it does.
I just control it.
Mm-hmm.
So is it really, then how is it a non-operational entity? Because it's operating.
So the definition of operational is if you're seeking donations or not seeking donations. That's what they class as the differential between an operating foundation and a non-operating foundation.
Can you have both?
You can have both, but there would be two different entities.
Yeah.
It wouldn't be one entity that does two things. Yeah. You could have the Four Angels. You could have the Five Angels.
So in a nutshell, what's the trick?
So let's just go back to that example with the land. If you did that personally, you bought a piece of land, you bought it for $1 million, you sold it for $2 million, you're going to pay capital gains tax in the middle, right? So on that $1 million of gain, you're going to pay roughly a third, give or take, if it's short-term, long-term, what state you live in. So you're going to pay about 300-ish K capital gains tax. But if that's done in the foundation, firstly, at the personal level, you get $1 million deduction on your tax return, which can be used over 5 years. If you don't use it all in year one, it isn't wasted. You can use that over 5 years. So that's a big personal benefit for you. But then the knock-on benefit is there's no capital gains tax in the foundation. So now you've just created $300,000 that would have went to the IRS, but now it can stay in the foundation and it can be reinvested however you want. So this is really good for real estate investors that usually do 1031 exchanges, because it's tough to find the next property to flip into, right? They've got to find a bigger property than what they have. They've got to refinance the debt, which is expensive now. And then they've got to do it within a really tight time frame as well. And if any of those things don't hit, they'll have a big tax liability. So they could donate that real estate into the foundation, sell it whenever they want, and then diversify. So they don't even have to stay in real estate. One of the things with the 1031, you have to go into a bigger piece of real estate. But in a foundation, you don't. So you could sell the land or the house. You could buy stocks. You could buy crypto or whatever you're looking to.
Could you buy businesses?
Absolutely, yeah.
So if I set up Four Angels could buy Lightspeed?
Yeah. So there's levels to it. If you have an operating business within the foundation, it's taxed at a 21% rate. It's called operating business income, right? So it's taxed at a higher rate because that's not the purpose of what a foundation should be doing. That's why it's for the higher net worth. They can passively invest with the money in there and get down to a 1.4% tax rate. Whereas if you're still operating a business, that's going to come to you personally, and you can donate a big portion of that into the foundation to reduce your personal tax bill.
So is there any limits?
Depending on which entity you have. So you as an individual, say Brad Lee has 5 companies, and then between the 5 companies, your net profit that comes to you is $10 million. You can donate 30% personally of all of the money that comes into you. If you wanted to donate more
So if I made 100 million last year, I can only put 30 million into that thing.
If it's coming to you personally. Now, there is an entity type that you can donate 100%, which is a complex trust. It's the only entity that you can donate 100% of what you make to a charity and get a full deduction for it.
Would you recommend that?
It depends. Everyone's different, and it depends a lot on what your overhead is. So if you look at your real personal overhead, it would be your house, probably mortgage, and then maybe tuition for the kids. I know you have a big family. So if you see what your personal overhead is, that's true personal cost, because the travel that you do is business related. I'm guessing a lot of the meals are business related. So there's a lot of that is actual business, but the true personal cost has to be covered by your businesses. And if you wanted to go up to 50 or 60+% donation to the foundation to grow the wealth, then you could do that through using a trust.
I might have to just go ahead and do it this time.
I'll see.
Well, I mean, do you need a lawyer? Like, how do I know how to operate it all? Do I got to call you every time I want to move some money around, or does it become fairly
Yeah,
obvious?
we teach you. So part of our services, one is the setup and the creation of your entity and structures, depending on how many you need and what that looks like, and getting the approval letter directly from the IRS. That's really important, because you don't just want me telling you, hey, this is approved, away you go. You want the IRS, who you're filing your taxes with, to tell you that, right? It's much stronger than a legal opinion letter or anyone telling you otherwise, just directly from the horse's mouth. So once that's set up and running, then our ongoing consultations to make sure that you don't lose that tax exemption status, along with the bookkeeping and the tax filing. We take care of all of that. So we help guide you. We've got videos and training, and you'll get a dedicated client success manager. It's all a white glove service, because people at that level of net worth, they expect a certain level of service to go with it.
How much is like the biggest one?
The setup fee or the biggest foundation?
Yeah, like, in other words, how big of a person have you seen do this?
Well, look at Bill Gates, look at Elon Musk, Warren Buffett. They all have private, non-operating foundations. So you're talking billions of dollars.
Are they detectable? In other words, like, can I find them?
100%. It's all search. That's why the audit rate is so low, because you can go online right now, and people listening are probably going to be on a computer, so they could do this. They could type in the Bill and Melinda Gates Foundation, Google it, go to the website, and they'll have their tax returns all listed there.
But is that a private foundation?
Yeah, private or public. And that's why it's kind of self-regulated, that it's got the lowest audit rate of any type of structure, because you have to put all of your tax returns in the public domain.
How could that hurt me?
Well, it can only hurt you if you're doing something wrong and someone detects it, right?
Yeah. I'm going to ask ChatGPT. Non-operational trust?
Non-operating private foundation.
All right. Let's have a look-see.
All right.
It says, and I quote, a non-operating private foundation is a type of private foundation that primarily distributes funds to other charitable organizations rather than conducting its own charitable programs. It typically serves as a grant-making entity rather than an active program-running nonprofit. It's usually funded by an individual or a family. The foundation has to distribute at least 5% of its assets to maintain its tax-exempt status. So basically, if I put $1 million in there, I got to give 50 grand away. No,
it's not right. So the 5% expenditure rule is what we were talking about with Bob a minute ago. It has to either donate or have administration expenses that exceed 5%. So what that means is, for the $1 million, you have to have movement of 50K. So you could pay yourself, your wife, your kids, travel. You could even have an insurance policy, which is a really smart way to operate in the private foundation world.
I'm sure you set up all this stuff for yourself.
I'm set up with it all, yeah.
You? Who else? Like, I just need some freaking co-signers to make me feel better.
Type in Warren Buffett private foundation. You'll see his.
And must file Form 990 PF annually.
Yes, that's the tax return. So whereas in your personal world you'll do a 1040, in the trust world you'll do a 1041. The equivalent of that here is the 990 PF.
Well, I would have to do both, right?
Yeah, because you have businesses, personal, married, filed jointly probably, and then you would have this as an additional tax return.
So an example would be a wealthy individual sets up the Lee Family Foundation with $10 million. Instead of running programs, the foundation donates $500,000 each year, 5% of its assets, to local schools, hospitals, and public charities.
That's one way. It can donate, or it can have expenses within the foundation of 5%.
So if I put 10 million in there, I have to spend 500,000 on something.
On something, which the real good thing to spend it on would be insurance.
That is a good one.
Because you got a death benefit, you can borrow against it, you can leverage it. I'm not an insurance agent by any stretch of the imagination, but I do see the value of using that. But then also you can invest it, right? So let's say you put that 10 million into the stock market. What type of return are you currently getting on your portfolio?
Right now,
yeah.
I'd say 12%.
Okay, so you covered the 5, right? Just on the gains that you have. So that is tax-free. There's no capital gains tax on any of that wealth that's being created from 1 million to now 1.1 million.
See, again, this is proving you right, sir. I asked it, is it tax exempt? Do all wealthy people do this? Yes, a non-operating private foundation qualifies as a 501c3 tax-exempt organization, meaning 1, no federal income tax on earnings. Investment income is generally tax-exempt, but it does pay a 1.39 excise tax on the net investment income.
What's that?
Tax-deductible contributions. Donors, me, can deduct contributions from their taxable income through deduction, although deduction limits are lower than for public charities. That's the 30%?
30%, yeah.
So if I donate $1 million, I can only write off $300,000.
No. That's 30% of your AGI. So if your total AGI is 10 million, you can write off 3 million personally.
Mandatory distributions. To maintain tax-exempt status, it must distribute at least 5% of its assets annually to be qualified charities. And that, again, was the expense part.
That's the expense, yeah. That includes expenses.
Do all wealthy people do this? Not all, but many ultra-wealthy individuals set up private foundations because control and legacy. They can direct how charitable funds are used even after their death. Tax benefits. They reduce taxable income significantly, avoiding estate taxes and maintaining tax-free asset growth inside the foundation. Family wealth strategy. Some use foundations to employ family members, keep wealth under the family control, and avoid heavy estate taxation. Public image and influence. High net worth individuals use foundations to shape causes they care about and enhance their reputation. Examples of wealthy people with private foundations: Bill and Melinda Gates, Warren Buffett, the Walton family, Ford, like Henry,
yep.
And I'm sure a whole bunch more. Let me ask, would there be any reason not to set one up considering all of these benefits? It says, while private foundations offer major tax and legacy benefits, there are some downsides. Let's get to the bottom of the downsides.
Life, right?
Huh?
Like everything in life.
So let's say there are some downsides that might make other options more attractive depending on your situation. Here are the key reasons why someone might not want to set one up. Number one, high administrative and compliance burden. Ongoing management. Foundations require legal, accounting, and operational oversight, which means hiring attorneys, CPAs, and staff. But you provide that.
All of that. We do a white glove service.
IRS scrutiny. Private foundations are subject to strict rules from 990 PF filings, excise tax payments, and self-dealing restrictions.
Yeah, we'll touch on that in a second.
And then the annual 5% distribution rule. Even in a bad market years, you got to distribute no matter what.
No matter what. But it's net. So let's say you own a piece of real estate. You don't, and let's say the real estate's worth $10 million, but you got a $9 million loan. You don't have to pay 5% of the $10 million. You pay of the equity piece that you have.
Number two, excise tax on investment income. Unlike public charities, private foundations must pay a 1.39% excise tax on their net investment income. If the foundation holds billions, like Gates Foundation, this tax can be substantial. Not really.
It's a lot less than paying 40% when
that's dumb. Lower tax deduction limits compared to public charities. Only 30% of AGI for cash and 20% of AGI for appreciated assets. About that.
So that's the difference between you putting physical cash in versus stocks, crypto, art, yachts, cars, those types of things. But that's where you could do it through a trust and get 100%.
Limited fundraising ability. You can't really raise the same amount of funds when it's private. Something that might be more flexible is a donor-advised fund.
Not really. It's different purpose. So the donor-advised fund, you have to give up control of. The benefit of the donor-advised fund is you can put a 60% deduction in personally, but you actually have to fully relinquish control. High net worth people don't want to do that.
This says who should set up a private foundation. It says, number one, if you want to control where donations go, long term,
yep,
you have at least $5 to $10 million to fund it initially.
You don't need that much. Traditionally, you do. That's why we bridge the gap between the elites and the successful multimillionaires that want to get into these more sophisticated tools and structures, but don't have the team to do it. Like it said, the admin expenses, the compliance, it's a lot of red tape involved. So we kind of make that easy for them. And that's the value of the service that we provide.
So what does that service cost?
It varies. It's a sliding scale depending on how much you put in. So it's similar to how wealth managers charge you a certain percentage depending on how much you have in with them. We set that up in a similar way.
What if like you guys decide to quit?
Then you find someone else.
You just have to have these people doing these things.
Yeah, if we decide to quit, we wouldn't just leave you hanging. We'd find a good alternative for you to interview 2 or 3 people, see who you like, and then they would take it over. They probably wouldn't offer the services in the same way we do it because we are tailored specifically for high net worth individuals, multi-7, but usually multi-8-figure business owners. And we hold their hand every step of the way. They don't want to become experts in non-operating private foundations. It gives them a headache just talking about it. So we do all of that heavy lifting so they can focus on their business, their families, and whatever they want to do. And we take care of the rest of the administration and the compliance, the bookkeeping, the tax filing, so they can just focus on the fun stuff.
What's a DAF?
DAF, not familiar.
That's what I said earlier. The DAF is a donor advised fund.
Yeah, donor advised funds. They are good if you actually want to do a lot of charitable work. What happens is, let's use the $1 million example that you mentioned earlier. You would donate.
Because if I did this, I'd only put a couple million in it max.
That's fine.
For
but
now.
The difference is if you put it in a donor advised fund, you don't have control of it. You literally give it to a wealth manager or a designated person that will invest that.
No thanks.
Wherever you tell them to, or whatever your portfolio is or want it to be. But you can't get that money. You can't control it anymore. It's gone. You've taken a 60% tax deduction. So you get more on the input, but no control. It's gone. Now, the other thing about donor advised funds, a lot of people put money into them and it just sits there. There's no requirement for it to actually be donated to any charity. Whereas with the private foundation, you put $1 million in, you get a 30% deduction, but you fully control it. If you want to buy stocks with it, land with it, real estate, crypto, a boat, whatever, a yacht.
I mean, essentially, especially if you're doing this just for tax strategy, well, then that's what you would do. So like, let's say I got $1 million or $2 million right now, I'm about to invest. Well, before you go and invest it and make that money, put it over here, put it in the foundation, and then get a tax write-off of 30% of that.
30% of your overall AGI, not just of what you put in. Your AGI,
yeah, but I haven't made anything yet.
It doesn't matter. On a personal note, you've made 10 million for the year, right?
Let's say. And
you can get a 30% deduction. So you can put 3 million in and get the full 3 million written off as a tax deduction.
Oh, I see. So if I made 10 million, I can put up to 30% of that in.
Personally. If you wanted to put more in, you'd need different entities.
Right. Okay. So I'll throw a couple million in and then go. Now that place makes my investments for me.
Yeah.
And now it's making all the money tax free.
1.4% tax.
And then as it stacks up, that's my investment fund.
That's exactly it. It's a wealth creation tool.
Yeah. So that's the way I would look at it.
Yeah.
And that's why this says, well, if you don't have 5 or 10 million, you probably shouldn't do it. What are you talking about? Why wouldn't you do it with 100,000 if you could?
It doesn't make sense.
Depends on the fees.
Yeah, the fees are too high at 100,000. If you're making millions, this is a no-brainer.
Yeah, dude, if you're making millions, this is a no-brainer.
Yeah, but if you're not, then there's other things you can do to reduce taxes. Firstly, you shouldn't be investing that much if you're not making millions, right? You're going to do it all at a lower scale. So rather than setting up this big complex structure, just go use all of the loopholes that are available. You don't need me yet. When you're making millions, then come back and we'll have a chat.
So, folks, just if you're making millions, you should be reaching out to KC.
Yeah.
And when you say millions, like 5
plus, yeah.
5+ mil. Well, that qualifies me, big dog.
There we go. We just got to get you over the line now, huh?
I know. Well, again, timing's everything. And again, I just wanted to figure out, is it legal? But,
You just checked.
Yeah, I talked to that accountant or that CPA and ChatGPT says it is. Here, I didn't ask if it's completely legal.
Yeah, just go on
Let
to
me see.
irs.gov. It'll tell you everything.
Yeah, and you're
you
saying if you go to the IRS, folks, if everybody's like, no, this can't be right, because a lot of people are skeptical. The IRS does a great job of scaring people.
Yeah, great job.
And then, people's intention, and then you find out, oh, I didn't know I wasn't allowed to do that. Next thing you know, you're in trouble. Here, I'll ask it this. I'll say,
but that's why we're here, right? We keep the compliance piece.
This simply for tax advantages. Is there any way to be charged with any crime? Let's see what it says. If you set up a private foundation or a dormant foundation strictly for tax advantage without true charitable intent, there are several legal risks, including potential IRS penalties, loss of exempt status, and even criminal charges, but only in extreme cases.
You have to have a mission and a purpose, right?
You do?
100%. You won't get the exemption. We oversimplified it when we went through the steps, right?
Yeah.
But in order to get that exemption, you have to have a very clear mission and purpose as to why this is in existence. Now, that mission and purpose can be as broad as you like or as narrow as you like. The broader it is, the more flexibility the owner has versus, and let's just use an example. If your foundation is to help underprivileged children in Kenya with their eyesight, as an example, then that's restricting you a lot, right? But if your foundation is for the betterment of mankind, scientific, educational purposes, environmental purposes, now you can do a lot more things with that foundation because it's got such a broad scope, mission and purpose. So we go through all that as part of our onboarding to make sure that the mission, the purpose is one, in alignment with you, because there is philanthropy, right? We're talking about taxes and we're talking about savings, but when you get to that level of wealth, there usually is a little piece of philanthropy that most people do.
Yeah.
Doesn't have to be huge.
Like me, I did it before I even got to that wealth.
Yeah. So you would just do it through the foundation now. So we would just phrase it in a way that was broad so that you could do what you're already doing, but then now you're getting all these additional benefits too.
Yeah. I mean, at the end of the day, you just got to do it right.
And that's where we're here, because that's why you need a $5 million+ family office to deal with all of this BS, because there's a lot of red tape and loops that you've got to jump through to make sure you are fully compliant, because you can't lose that tax exemption status. That's like the holy grail of, hey, I'm now tax exempt.
Yeah.
This is the document.
And of course, like I was assuming, they want you to be intentionally trying to be charitable.
It helps everyone, right?
If they think you're hiring your family for exorbitant wages and you're doing it all for personal gain, it's not illegal. They'll just take away your tax exemption, and then you're back to where you are now.
But again, like, there's no rule against that. You can hire your kids, your friends, your family. You just have to justify it. It's like, okay, well,
has to be reasonable though.
Yeah,
right?
My 5-year-old kid is not going to make $1 million salary. That's not reasonable. So it's similar to like an S corp where you got to pay yourself a reasonable salary. It's a similar principle in the foundation, but don't kid yourself. There's people in foundation. If you look at Bill and Melinda Gates Foundation, their executives are making 7 figures. They're making millions of dollars.
Oh, I'm sure, because they got another couple $100 million to fight any legal trouble.
Yeah.
They're releasing mosquitoes.
Those guys, that's a different podcast for what they've been up to, and the Hiltons and all of those guys. But yeah, there's a lot of crazy stuff that goes on.
What if I had the foundation, bought a house, and then rented it? The foundation rented it to myself.
So we touched on this earlier. It said something about self-dealing and disqualified people. You can't do that. So this is...
So all you can do is use it to make money tax-free and pass it on to generations.
Yeah. There you go. It's a legacy play.
It's a legacy play.
And
a
tax deduction.
See, that makes it sound more legit. Only because, like, when people hear you have to pay taxes.
You do. You pay 1.4%.
Yeah, but again, I mean, there are ways that you get cleverly around them in some ways, and they're legitimate loopholes that are in the laws. It's 100%. Just you don't know them, like caste segregating. 100% tax acceleration on depreciation.
Well, it's 60%. Gone down by 20% every year, but it was 100%. Yeah.
I think it's coming back.
Hopefully,
I'm hoping.
Yeah.
Well, I think they're going to have to.
Well, there's a lot going on with the economy and the administration, right? So we don't even know if they're going to abolish the IRS completely or not, right?
Oh, what if they did?
That'd be amazing, right?
Well, then all your strategies, they would be worthless.
They would evolve into something meaningful. We don't know the answer, but there's always going to be...
There's no taxes anymore. IRS
but they would tax you differently, right? So the talk is that they're going to increase the prices of everything, but then abolish the tax, which doesn't really make any sense.
I would love it.
And net, you'd end up paying more. So
I would love it.
We'll see. We'll see how it goes.
I don't like paying taxes on unfair shit. Like, for example, if I make $1 million and I pay taxes, and then I give you $50,000, well, now you got to pay taxes.
Yeah.
Dude, that's not fair. I already paid the damn taxes on that money. How many people are they going to tax on the same dollar?
Well, if you look at the history of taxation, we shouldn't even be paying taxes right now because they only use taxation to fund wars.
I think what we should do is a flat tax, period. I would be okay with 20%. I'd be okay with 30%, tell you the truth, if there was accountable where the money went. Like, dude, if we were really helping the poor, we're really building the roads, we're really taking care of the sick and the old, and we're really...
Vets as well?
Yeah, veterans. Like, if we were really doing what we should be doing with it, cool. But when we look at what Trump's finding,
Oh my
and
goodness.
Elon's finding.
It's
People are like stupid. They're like, dude, they're paying $1,200 for a coffee cup. No, they're not, dude. That's just what they wrote down. You really believe someone's that stupid to pay $1,200 for a styrofoam coffee cup?
I'm telling you, the government contracts,
dude, that is a scam.
Okay, so
what they're doing is they're writing it down.
Some of my
the
clients,
money's going somewhere else. The money's going in someone's back pocket.
Both things are happening.
Or black ops, one of the two.
That's true as well, but that's a different thing. So I can tell you firsthand that one of my clients gets paid in the region of $20,000 to change a light bulb on a government contract.
Yeah, but is the light bulb at the top of a 7,000-foot tower?
No, it's not. It's a regular light bulb. So different conversation, but the government has been highly inefficient for decades, right? I don't think that's a surprise to anyone. These government contracts that we're now seeing are absolute scams, right? Why are we funding LGBTQ ventures in different Colombia? There was a play, or like, it makes no sense, right? It doesn't better any taxpayer to do transgender mutation of mice in foreign countries. Why do you want to change a mouse's gender? It doesn't make any sense. Why are we paying for that? So I'm glad that Elon Musk and Doge are kind of unraveling all of this, because there's so much wastage, and it's quite fun to actually go on the website and see line for line some of the crazy shit that has been funded. But a lot of it, like you said, is going into the back pockets of all these politicians that somehow sit on boards of NGOs and get a backhander paid into some Swiss bank account somewhere that no one knows of. How's their net worth millions and millions of dollars when they're on a government salary of a couple $100,000? Nancy Pelosi being the key one, right? But
yeah, I think that's coming to an end, though.
It is, gladly, right? Because these guys are all insider trading and helping themselves get rich, where people can't even afford eggs now on the streets.
I almost want to like go into politics just because it's so freaking easy to get paid if you're on the inside.
If you're on the inside, yeah.
Like literally go into these meetings and find out information, and then you're able to act on it, but yet the public can't.
Yeah.
And then when you finally get caught and they come up and they try to change the law, you're the one they're asking if they can change it. It's like, dude, that's not fair, man.
The biggest scam, because they're doing it in suits in Congress behind all of these laws that makes it legal for them. Whereas,
and they're the lawmakers.
It's just crazy. It's all insider stuff.
It's like if I came to you guys, let's say I own this company and you guys work here, and I'm forced to come to you guys to see if it's okay to, like, you know, have you work 5 days a week. Would that be okay? And you guys get the answer.
Yeah, I think we should do a 3-day work week, and that's it.
Yeah, and then, you know, you get to set your own salary. It's just handcuffing. It's not fair. Like, listen, politicians, they should be making the laws because someone has to, you know, but when they leave, and everyone should have to leave within a couple of years.
That's a good thing. I agree with that. They should term out after a short period of time. Not some of these guys have been there for like decades.
No, you can't do that. You should go in there, do your duty. It should be a civil duty to go serve the government. Do your part. If you're really kick ass, maybe you can go 2 terms, but that's it. Why? Because you'll get dirty after a while. You'll get dirty. You'll get backroom deals. You can make these old boy frickin' network deals happen, and that's what is happening.
And it has been happening for generations and decades.
And we all know it. But no one can do anything about it because
they're never going to prosecute themselves, right?
That's right. That's the unfair part. These some bitches are the ones that you have to go ask to change it.
They're not going to do it?
They'll never do it. That's why I think, you know, instead of the IRS, abolish the government. Legit.
What would be the alternative?
Fucking state-run states.
Well, you could argue effectively that's in play, because if you look at America, it is very fragmented by state anyway.
You know, when it was originally created, the federal government, I think, had 3 or 4 laws, and it was like no counterfeiting, no bank robbing, and no like cattle stealing.
Just basic stuff, yeah.
Yeah, but there was like 3 or 4 federal laws. Everything else was up to the state. That's how it should be.
Well, I think,
and if I don't like my state, well then head to another one.
Yeah, they're getting towards that in terms of, let's use the Department of Education, right? They're trying to decentralize that and have the states run their own education, which makes a lot of sense, right?
Of course it does.
If you're in the middle of Montana, you might not want to learn welding or some shit like that. You might want to learn how to deal with animals or cattle or other things that are more suitable for that climate, right? Versus in California, you might want to learn something different. So the state should be able to dictate a little bit more on that.
Are you smoking cigars still?
I am.
All the time?
5 days a week.
I kind of slowed down a little bit.
Yeah, I'm not seeing you post so much about it.
Well, it's because I found these little devils.
What do we got here then? Oh, the little nicotine thing you put in your mouth. Flavored.
The old Zin.
Any good? Just under your tongue?
Just down here in the lip.
Yeah.
Well, somebody had me do one, and I did it, and I went out on a stage and killed it. And I thought, damn, dude, it made me focus. It made me sharp.
Did it though? Was that just you anyway? You kill it anyway?
No, I kill it sometimes, and sometimes I suck. But I mean, at the end of the day, this really did make me like, bang. So I'm like, cool. And then, nicotine obviously is something the body needs. It's actually
it's
good
not as bad
for you.
as people think. Yeah.
Yeah, no, it's actually good for you. There's studies that show like this will knock out like
Clean, 'cause
disease.
it's got nothing else in it, right? It's just a little bit of flavor and a little bit of nicotine.
Yeah, these pouches. Yeah.
Okay.
Yeah. So I started doing 2. Like I'd wake up, pop in 2.
First thing in the morning, no coffee, no nothing, just pop them in.
Yeah, nothing.
Okay.
Just wake up, pop in. Like before I'd wake up and smoke a cigarette. You know what I'm saying? You ever smoke cigarettes?
No.
If you ever smoke cigarettes, you'd realize like after you ate a meal, boom, you got to have a smoke. Wake up in the morning,
Psychologically,
boom,
right?
smoke a stogue. Well, it's your body craving nicotine is what it is.
Okay.
But I was smoking 4 or 5 cigars a day.
It's a lot.
Yeah, and I didn't realize that's nicotine. So when I popped
But it's clean a leaf. There's not all the shit that you get in cigarettes.
No, hell no. If I was gonna pick, it would be smoking cigars or this. Problem is, smoking cigars makes you stink. I just did one the other day. I didn't stop.
Yeah.
But these make me not want one.
Wow. All right.
So it's like I'm getting the nicotine. But I was saying, I put 2 in the morning. Then when a couple hours goes by, I'd throw 2 more in. Then a couple hours go by and I'd throw 2 more in. Then I'd throw 2 more in.
How many of them you doing a day?
Well, before I realized you can't, I was probably doing 20.
Fuck, that's a lot.
6 milligram each.
Wow.
2 at a time.
And what's
10,
the recommended
10 to 14
dosage?
times a day. And I'm just thinking, I would get sick if I was getting too much. You would think, right?
I don't know.
Because if you don't, do you smoke? You smoke cigars? So if he put one of these in his lip right now, he would probably take it out within a minute or 2. I had someone say, hey, let me try one of those. I said, you sure these are 6 milligrams? He goes, dude, sticks in his chip. He turned green, started
I'll try
puking.
one after we finish.
Yeah, but you do nicotine, so you'll probably handle it. He won't. I promise you that. I've seen two people now that didn't smoke. They wanted to try it, and they got sick. So I was just assuming I'll get sick if it's too much nicotine. So I just kept popping them in, and they were fine. I'm like, cool.
But does it have like a recommended daily amount that you should put in? Or no?
I haven't read that, but I have a concierge doctor that I talk to.
Okay, me too.
And so my doctor's asking me some questions, and then I said, man, I don't know if I'm getting old, but like my freaking urine flows a little bit less than normal. He said, well, that could be this and it could be that.
I have to put a camera down there.
Yeah, he said, could be this and it could be that. It could be this. And I said, well, could it be like, because I started intermittent fasting to get killer shape.
Get buff again.
Which works like a charm.
Are you still doing jiu-jitsu or not?
Is injurious. Very injury
a bit
prone.
bruised last time.
But I did intermittent fasting. So in the mornings, I wouldn't eat till like 2 or 3.
That's good.
And so I just drink coffee.
Black coffee though, right?
Yeah.
Yeah.
So I just told him, I said, he goes, what are you doing different? And I said, nothing really. I go, I'll probably have 6 to 8 cups of coffee in the morning. And he goes, 6 to 8 cups of black coffee. I said, yeah. He goes, dude, that's a lot of freaking caffeine. I said, yeah.
You're extreme in everything you do.
Yeah, and
right?
then I started doing these pouches. I'm doing 2 6 milligrams probably all day. He goes, what do you mean? You just leave them in all day? I said, no. I stick them in for a couple hours, then I throw them out, and
They've got a taste to them.
And these are lemon citrus. Okay. Then I throw another 2 in, and then when a couple hours, and then I just want always fresh ones. So like every 2 hours, I'll put 2 more in, and then sometimes I'll fall asleep with them in.
Oh wow!
And he said, bro, that you can't do that. And I said, well, wouldn't I have gotten sick? He goes, just cut back and see what happens. So I cut back everything went back to normal. But dude, I was getting brain fog. I was getting like, I thought I had dementia. Yeah. Like one day I'm looking at my friend that I've known, and I can't remember his name. Oh, wow. I was looking at him going, and I wanted to say his name, and I'm like,
yeah, it's not a good sign.
No, I said, what in the fuck? And so I that was these.
So dude. What are you on now? What's the dosage?
Well, I was going to just stop, period. And he said, don't do that either. Now you're fucking addicted to it.
Yeah.
He said, what I would do is just scale way back. Yeah. So now I'm doing like 2 or 3 in a day.
Okay. Sounds more reasonable.
And no coffee, except I started 1 cup of coffee in the morning because I started to do collagen. And I put it in the coffee.
Yeah, butter as well is a good one to put in.
But coffee never really got me. But that right
Hormozy got me onto those. I've tried them before, but I didn't really feel much different. I wasn't doing it to the dose level.
Stick 2 of those in your lip.
Yeah, all right.
See how it goes.
We'll give it back.
So, hey, listen, rich people listening. Mm-hmm. At the end of the day, you can do research. Thank God ChatGPT exists now, dude.
It's easy, right?
ChatGPT is just an aggregator of factual and recorded information in a millisecond.
It's not always right. You should always do your own research too.
Well, you should, but it's a good starting point.
Perfect, yeah.
Like when someone sends me a contract, I load it into ChatGPT and I say, which side has the advantage? And it'll go, then I'll send it to my lawyer and I'll say, look at these parts.
Yeah, smart.
I put my financials of the company in the other day and spent like 50 minutes telling it everything about this company. And I said, tell me what it's worth. Would you sell it or would you scale it? And it went, and it was worth more than I thought it was worth.
Well, let's put it in my software because we didn't even touch on that, but we just created a new software that is effectively your AI CFO that you can talk to, has all your numbers, and it can have that type of conversation with you.
Well, I asked it what it was worth. It was worth more than I thought it was. And I'm like, how with only this much profit? And it said, your particular software, the SaaS, they don't sell
20 to 23 multiple, right?
Well, they sell on ARR.
Yeah, on the top line, not the bottom line. It's not EBITDA like regular.
Yeah, and I couldn't believe it. And I'm like, dude,
we're just talking about
for
that
this whole fucking 10 years. I mean, 24 actually, but like in the last 10 years.
You're talking about the Lightspeed.
Lightspeed.
Yeah. So how many users do you have on that?
A couple million. But I mean, like in my mind, I was trying to raise the profitability.
But you don't need to. It's just the top line that you need.
No, but I could have, if I knew that, I could have like made all kinds of deals and not worry about profitability. Just get ARR.
Well, why do you think all these tech startups just have such a high burn rate?
I had no idea.
Because they don't care. It doesn't matter to them. Yeah. They'll burn through VC money like it's water.
And
right?
I've never raised money.
Yeah, try not to.
It said you should. Well, in this case, I should. If I could borrow, for example, let's say 50 million cash, burn it over the next 5 years, and get my ARR to 100 million.
Yeah,
dude, I'd be worth $1 billion.
Yeah,
2.3 billion. And then I'd pay back the 100 million. Like it doesn't matter. And so now I'm like reevaluating Lightspeed, and I'm about to get.
It's going a million miles an hour now, right?
Well, just the pricing model that I always have had, because I needed to make money.
If you could mix AI into it, you now go. Let's say it's up to like 28 multiple then for an AI company.
Well, we mixed AI in. Now you can go through the training, and then you get tested, and then we have you role play on AI-based customers.
So if you can somehow change your classification from SaaS to AI, that multiple goes even higher.
What if we're AI, SaaS, AI?
Probably in the mixtures, like a middle ground. So let's just use a scenario. SaaS is 20x ARR, and then AI is 30x. So if you blend, depending on how much of the AI is a piece of it, let's just say 50-50, then you could go in the middle at 25.
And growth rate, that matters.
Yeah, as long as the numbers are trending upwards, right?
Even if they're not. Because I put in there, what if I was having a 10% year-over-year decline?
Your price would go down. Like in reality, when someone's looking to buy it, they'd ask, why is this going down? Are we buying it and it's about to expire? It's been over the hill? Or is there a legitimate reason for it? That they'd factor that into the price.
They did say it would factor it in it, but they still would. It's still valuable.
100%. The multiples are stupid. Like, you look at the CPA firm as an example. The multiple of that is about 1, maybe 1.2 of revenue. Just ridiculous, right? So you're seeing all these boomers that own these CPA firms not really able to exit for any substantial amount of money because the multiples is non-existent compared to if they had a management team in place, if it wasn't so centric around them as the individual, which is SaaS is the opposite of that. You don't have a high overhead with SaaS. You do because you've got all the recording facilities and staff and stuff, but a regular SaaS company is making a really 70, 80 plus margin, which allows you to have crazy multiples.
Yeah, the multiples are stupid.
Yeah, so that's why we created the AI CFO financialfusion.io, so you can plug in your financials, but it's not in a public domain. The minute you put your financials into ChatGPT, they're using that data. So we do that in a private environment, and then you've got a privatized CFO that you can chat with and have a conversation with.
What's that cost a month?
We're figuring that out. Right now it's $499 for the AI CFO and the financial analyst. It gives you a month.
$499.
Yeah.
$500.
Yeah. How much would you pay for it?
Well, if it would replace a real CFO, you could
Not
spend
full.
a hell of a lot more.
Yeah, it's not fully replacing a full CFO. It's going to make your CFO more efficient in his time if you have one. But if you don't have one, it's going to allow you to not need one for an extra few years.
Well, dude, 500 is a no-brainer.
I think so, yeah.
$500 to get all that information, and you can upload your actual financials.
It does it automatically, yeah.
Yeah, instead of trying to figure it all out yourself and
so
do
we're
spreadsheets.
plugged into QuickBooks, to Xero, Zoho, all the big accounting systems are on their platforms.
You know what it also told me? I'm priced too low. Based on all the, LMSs, which is what they kind of consider me. Mm-hmm. I'm priced too low.
Do you do regular competitor analysis?
I've never done any of that.
So maybe you should look at that.
Dude, I've never ran this place like an actual businessman would. I just ran it like a freaking idiot.
Like a maverick that you are.
Yeah, but hey, guess what? Now that I stuck it in there, I'm going to need your your non-operational entity. Because again, dude, I'm telling you, it's a big number. I'm like, holy shit.
But if it is that big number, think of that. You could save millions in taxes then, because that capital gain that you would pay, because you started this from nothing, right?
Yep.
Bootstrapped it, didn't take any funding. So all of that is you're going to have millions of dollars of taxes.
Yeah, well, I'm not going anywhere for another 2 years because I asked the question, would you sell it or scale it? And he said, I would scale it. Because although that's a good chunk of money, if you just did this over the next 2 or 3 years, he said you'd get 5 times that amount of money.
Tony Robbins says a lot of this as well in his seminars and stuff. I've been following him for years. He had the guy from Salesforce who was just in the audience, left his corporate job, started Salesforce, and blew it up into a multi-billion-dollar company.
Mark Benioff.
You're already so far ahead of him in terms of you got 20 years of user base of experience. You pull those few little levers, there's no reason that you can't expand to that level.
Yeah. Well,
especially with AI, it makes life easy for everyone.
How'd you get into AI? Did you just hire him?
Yeah, internal development team. We looked to go external, but it's just going to be a never-ending thing, right? So I'm like, rather than go external and find people that, just trying to get one over on you, you don't really know what it is. It's easier to have the staff internally control it, and then they can easily focus 100% on whatever we need rather than working on this project and then that client. So we brought them internal, and then they work across all my companies. So they do the CFO stuff if we need something on there, all the IT stuff, as well as the AI. So we've got a good mixture.
I think that's going to be your big exit right there.
It's going to be one of them, yeah.
Well, because the other one, that's just 1 or 3 times multiples.
Yeah, it's just a cash cow.
But now you got a multiple.
We'll have a 28 to 30 multiple on the financial fusion. Me and my co-founder.
No funding?
No, I don't need it. Well, if you can fund it yourself, why would you bring money in when it expands? And then, like you said, if you can take it from 10 million to 50 million very easily, that's when funding actually will will come into play. We're too early for that right now. I can fund it myself. I don't need other people's money. Get it going, get some traction, then we can exit.
Where do people find that?
Financialfusion.io.
Financialfusion.io. Make sure you tell them the bomb squad so I get some sort of piece for the niece. If you guys want to, if you're a high net worth individual and you want to, legally, get out of some taxes or at least create legacy wealth, reach out to Together CFO. And other than that, just follow you. Where do they follow you?
Yeah, on all of the platforms, it's Together CFO or KC Chohan, 2 letters, KC like Kansas City, and Chohan, CHOHAN.
There you go. Till next time, keep it real.